Good afternoon, ladies and gentlemen, and welcome to the ENSILICA PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from ENSILICA PLC. Ian, good afternoon, sir.
Good afternoon. Welcome everyone. Thanks for joining us for the audited results presentation for year ending 31st of May 2025. This has been a year of strategic progress defined by robust contract conversion, and we converted 6 contracts, and this really shows that we're positioned well in the semiconductor value chain. We've also had great growth of chip supply, but disappointingly the total revenue is down, and this is due to customer-induced delays. Resilience to this is being built up through the strong supply revenue, which means in future years we won't be so susceptible to these to the variation in revenue. Just the normal disclaimer for the forward-looking statements. Please read at your leisure. Just for those that are not familiar with the company, I'm a co-founder. I started my career as a electronics engineer at PLC, moved into semiconductors in the mid-90s, working for Hitachi and then Nokia. I set up ENSILICA in 2001, originally as a design consultancy. In 2016, we started the transition to be one of a fabless ASIC company, and we'll explain more about what that means in the slides and our progress. I'll let Christopher introduce himself.
Good afternoon. I'm Christopher Rademan, Chief Financial Officer. Originally from South Africa, I spent my first formative years working as an auditor with KPMG. I then left for the pharma and biotech industry, first working for Archimedes Pharma, and then subsequently as Group Financial Controller at Oxford Biomedica PLC, a company listed on the main market of the London Stock Exchange. I've been with ENSILICA now for 18 months. Thank you.
Thanks. So, as I mentioned, ENSILICA, we're a fabless chip maker. We don't have a fab ourselves. We use the same business model as NVIDIA, Broadcom, Marvell. We focus on mixed signal chips. These are high value, high margin chips. These are the same type of chips the likes of Cambridge Silicon Radio, Wolfson, Dialog Semiconductors, Nordic, all scaled on the back of. So they're highly differentiated silicon chips. Our assets are our people, IP, customers, and suppliers. We have nearly 200 staff in 3 continents. They're highly skilled team with a track record of developing chips and getting them into production. And designing chips and getting them into production is very much a team, a team sport. It's not about individuals. It's about having competent teams. IP is also very key in developing chips. These are blocks that you reuse from chip to chip. We have IP which addresses all of our key markets, as well as things like post-quantum cryptography IP, which is cryptographic IP that is resistant to attack from quantum computers. So actually really the latest type of cryptographic IP. We have a global customer base, including well-known companies like Siemens, to scale-ups like AST space mobile. Suppliers are important, building strong supplier relationships with wafer fabs such as TSMC and Global Foundries, and we have direct relationships with those, and also the OSATs, which is outsourced assembly and test companies. These are the people that chop up the wafers and test them. So we've direct relationship with those, which takes time to build. I mean, we're focused on 3 markets, and I'll talk about those markets as we go through the slides. Our revenue comes from designing the chips, and that's either the chips that we have future supply on. That's called the NRE, non-recurring engineering fees, where we co-invest with the customer to design the chip, and we later supply it. And then the other areas, consultancy, which is where we really started the business, and this is still a key area for us. And in that model, we don't supply the chip. The customer looks after the supply chain, and the supply revenue is around about selling the chip or a royalty per chip. I mean, one investor described this as the easy revenue, and it's a bit like an annuity stream where good high margins, good visibility, and we have a reoccurring revenue stream from that. I mean, our business model, it takes 2 to 3 years to design the chip, where we have the NRE revenue, and then the markets that we address are all sort of high value, long lifetime markets where we have 7 to 10 years of chip supply. You build a portfolio of chips, and some of those chips will over deliver, some may under deliver, but that's caused natural hedging in there. And I said this portfolio of chips will protect us from ups and downs in the NRE revenue. A strong IP. I talked about IP at the top, but it's important to have IP. Makes you more efficient in the design, but also leads to higher gross margins and allows you to differentiate your position. So our ambitions and objectives. I mean, we're approaching a really key phase now, one where our supply revenue will support our future investments and overheads before sort of non-cash charges. And we're targeting as a company to be cash flow positive on a month-by-month basis during 2026. Our ambition is to have revenues of 60 million in the short term, and through when Christoph goes through the slides, he'll show you how an illustration how we can get there just with the current bookings we have. Longer term, we have ambitions of greater than 100 million, and certainly one of our space user terminal side can exceed that revenue aspiration. Our objective is to capitalize on the growing European opportunities driven by the need for geographical resilient supply chain. I mean, some of this geopolitical uncertainties have really played to our favor in terms of European companies wanting European sourced chips. And our objective is to keep attracting qualified and talented engineers to deliver on our growing opportunity pipeline. And we're doing very well there. We've got excellent people, and they attract good people.
I'm pleased to present our financial year 2025 financial results. We were disappointed with the outcome of our revenues, where we achieved 18.2 million. This is a decrease from the prior year. In financial year 24, we had a large takeout that did not recur in financial year 25. We were expecting to deliver growth, but were impacted by the Edge AI takeout moving into financial year 26. And also the halting of the SIA project, which impacted our revenue generation. We are seeing significant progress in financial year 26, where our revenues year to date are significantly ahead of those achieved in financial year 25. Gross profit margins have come up by 4% from the 36% achieved in 2024. This is also due to the non-recurrence of the low margin tape out in financial year 24. We expect a small increase in margins in financial year 26, but not greatly so. It should be more or less the same levels. Included within other income is our RDEC tax credit. Due to the change from the SME scheme to the new merged scheme, there is a requirement under the financial accounting standards to present the RDEC tax credit under other income, which we have done. The expected credit loss of 1.8 million is almost entirely the SIA provision for bad debt, which the company prudently decided to take and also remove SIA from our forecasts. We are still in discussions with SIA at present, and would hope that the project will restart in financial year 26 or in 2026, but that does depend on SIA being able to manage its commitments and meet its commitments. We achieved a break-even EBITDA, which was a good result considering the headwinds we suffered during the year, but we are looking to significantly improve on that in financial year 26. Next slide. So just looking at the revenue split, we were very pleased to announce that chip supply revenues have increased by 97%, almost doubling in financial year 25. That shows that our business model is working. Our chips and supply have increased in both in volumes and in number of chips, and we're looking to increase that further in financial year 26 and beyond. As I mentioned before, we were disappointed with the NRE revenues achieved, which is mainly the tape out in financial year 24, which didn't recur, and also the SIA revenues, which weren't generated. Consultancy revenues are slightly down from the prior year. The reason for that is that some of the employees working on consultancy side were pulled into the NRE side, but the consultancy remains a key pillar of our future growth, and we are looking to slowly grow that in future back again to normal levels. Next slide. Balance sheet. So the main balance sheet items, intangible assets increased due to our co-investment in our customer development NRE projects, and also our own internal IP, which we then look to use in future development projects or to license out or achieve royalties on. During the year, we capitalized 5.8 million, and this was offset by amortization and impairment. The impairment is mainly related to the SIA asset, which we had to impair at the same time as providing for the intangible. Cash, the movement will explain further in the cash flow statement, and then external loans increased due to the refinancing with Lloyds, Bank of Scotland, of the 6 million facility, which increased the loans, and then of course we've also repaid some of the balance during the year. Next slide. So coming on to cash flow, we achieved a break-even EBITDA. We had positive working capital, which was driven by the new NRE contracts for which we achieved favorable payment terms, which allowed us to invoice upfront for the work that is being performed. The tax credit of 1.2 million was achieved. This is down from the prior year mainly due to the change in schemes by the government, meaning that the tax credit wasn't as favourable as it's been in prior years. It wasn't really due to a lowering in activity, because our activities were at more or less the same levels. Intangibles and capex investment, we spoke about 5.8 million, and then 0.7 million of IT and manufacturing equipment. And then interest paid, more or less the same level. There wasn't a piece of one-off interest due to the refinancing, which is not expected to recur in financial year 26. So we should see a lowering of the increased costs. Our cash consumption was 5.3 million. I would point out that 5.1 million of that was in the first half, and then the second half that slowed to 0.2 million. We're definitely not saying that will continue exactly at that level, but we will and have seen a significant decrease in cash consumption across the last few months. The net proceeds from financing, it included 1.2 million of the tail end of the equity raised at the start of the last financial year, and then also the net 1 million from refinancing of the loans. We received 2 million of new equity and then repaid about 1 million during the year, which gives us that net. Thank you. Then just to give you an overview of how the company is doing in terms of the chips that we have in our portfolio. We have 5 chips in supply. Two additional ones were added during the year, being one industrial one, which is ramping up nicely, one space one for which we've received the first royalties and is expected to slowly increase in 26 and then really ramp up in 27. We've also got the other 12 chips in development, which are scheduled to tape out quite a few of these during the next 6 to 12 months. So they are progressing very nicely. We've got 40 million of contracted NRE from our new contracts, which is being generated between financial year 25 and financial year 27, giving us good visibility over revenues. And then we've got 250 million of lifetime supply values, revenues, which is from our existing portfolio. We do not include chips where there isn't a final customer identified yet. So this could increase as we generate new customers for our current chips in supply. Thank you. And then just looking at our growth platform, we've tried to show an illustration of the potential revenue evolution that the company could experience. This is not meant to be a forecast. This is to give an indication of if the supply revenues continue as for the existing chips as they currently are going, and the chips in development for which we have customers, if these are completed successfully and go into chip supply as expected, and the customer is successful in selling it, then we would expect our future revenues to increase as shown here. Some of the chips could do worse, some of the chips could do better, and one of the things that gives us comfort is the fact that we've now got a portfolio of chips, which means we are not wholly reliant on only 1 or 2 chips. Also, we have some potential space chips that are not factored in yet because they don't have a final customer. And if these are very successful, then we could do even better than this illustration suggests. Thank you.
Okay, thanks Christoph. Now, I'll talk you through the markets, and one of those is the space communication sector. There's a lot of investment going into this sector, both private investment and also through government contracts and government funding. So there's it's a high growth sector. I think Starlink have proved that resilient space connectivity is it's a requirement, and everyone is looking for an alternative to Starlink's service. Chips are a key enabler for the space communication sector. They reduce power, size, and deliver the required performance. It's a bit like saying they're the sort of the picks and shovels of this gold rush. So they're used in 4 areas within the space sector. They're used in the satellite. It's called the payload, and there are RFICs, beamformers, processing units. They're used in the user terminal, which is the piece of equipment the actual subscriber has to connect to the internet, and there they have millimeter wave chips, digital beamforming chips, modem chips. And then the other area where they're used is the gateway. This actually connects the internet to the satellite. It's sometimes called a ground station, and they tend to be high performance pipes or optical links. And the other important area is that one called position, navigation, and timing. People might know it as GPS or GNSS, and this is around getting positioning and timing information. That the user terminal needs that so it knows its position and where to point at the satellite. But it's also used in drones, defense applications, and resilient, jam-proof GNSS is very important now. So here's a sort of list of the sort of European, US constellations. I said everyone's heard of Starlink, but there's lots of other ones in there. Iris 2 is the European constellation. There's one from Amazon, and 6 months ago we only had one of these as a customer, and now we've actually got feasibility contracts with or chip evaluations going on with 4 on here. So real progress has been made. So talked about the payload, and there's one particular chip in the payload, very complex one called a beamformer, and this goes in the satellite, and the satellite has a phased array, and it controls the footprint of the coverage as the satellite goes over the as it goes around the Earth. So we had a contract with AST Space Mobile back in 2021. We did a joint release with them, and we were supporting them in developing their payload ASIC, which gives us sort of tenfold improvement in processing power. I mean, we've built some unique experience and expertise in this, and we currently have 3 new feasibility studies for beamforming ASICs, 2 with satellite operators and 1 with a satellite sort of supplier manufacturer. These engagements, when they progress, will lead to multi-year, multi-million ASIC contracts. I'm not saying all of those will convert into contracts, but I would expect one or 2 of them to convert. Interestingly, that we did say this in an RNS where we announced the first royalty payment. One of those contracts, we have a what you might call a chip as a service type model, where we get a monthly revenue from every satellite using the chips in service. And I think that's an indication of the real unique value that we're demonstrating to the satellite operators through our chips, that they're giving us a piece of their revenue pie. So we're strategically positioned here to capitalize on these opportunities. We've got proven experience in what they call advanced node, mixed signal, and digital beamforming, and we are one of the few trusted independent European suppliers. I mean, it should be noted that one of our competitors in this area, Satixfy, that were also doing payload beamforming chips, were acquired by MD Space, and that acquired for a pretty sum, and they really are now an internal resource of that company, and not independent anymore. So the The user terminal, I said, you could think of this a bit like a sort of a set-top box that you'd use to pick up satellite TV, but it's a lot more complicated. It's got to both receive and transmit, and the satellite's moving, so it needs a thing in there called a phased array, which uses a beamformer to track the satellite. We've been working in this area since 2018. We've secured 20 million of funding from lead customers, European Space Agency and UK Space Agency. We have 4 chips now which are sampling. So we have the physical prototypes of those chips out with customers, and 3 more in the development, and all of that IP is owned by ENSILICA. So they're what you call ASSP's, application-specific standard parts. We've got multiple funded engagements with satellite operators to support the adoption of these chipsets. We've got here, then a number of chips per user terminal, different types of chips. We're the only provider who has all of the key ICs that go into a user terminal, and that means we can provide a highly differentiated, integrated solution rather than using bits of Lego from other places. So we can add, we've added novel features, and we have a sort of patent pending architecture with strong IP in this area. It accelerates our customers' time to market and gives them better performance. We are using mainly a European supply chain on this, so that's very attractive to the European satellite service providers. Using our chips rather than chips from other regions. So the automotive and industrial area, I mean, they're very similar in ways. They're all about high quality, longevity of supply. It requires cyber security, functional safety features, and the combined automotive industrial market is worth just over 160 billion. We say about 5% of chips are actually ASICs, designed for one particular customer. So really, that's an 8 billion market. There's a high barrier to entry to getting into this market, and we've been working on that for some time. That those customers are looking for high reliability, quality, and a supply chain. So you need to build up those systems to supply. What you also need in all of this is you need to sort of carve out your key niche in this area, and our niches are around cyber security, functional safety, things like motor actuator controllers and sensor interfaces. So it's important to have those niches, to have the IP which you can reuse from one chip to the next. And we started off with our first win in 2016, an automotive with an industrial, then a win in 2018 with an automotive one, very highest functional safety rating, and then recently we've had a win, 2 wins with Siemens, who are the market leader, and we have major automotive tier ones as our customers, which I said there's a very high barrier to get on the customer list of these companies. So we talked about those 6 projects that we converted. I mean, we're working on those, and from the RNS we released on Monday, the 3rd of November. We're progressing well with those projects, and we also have a new wave of projects which start off with feasibility studies for various chips, both in the space sector and in the automotive and industrial sector, that will lead to our next wave design wins. So we're really making great progress there.
So in summary, we had 6 excellent new NRE design wins during financial year 25. And one of the key highlights for me is that these are progressing as planned, with some of them expected to tape out in this financial year 26, and after which they'll hopefully go into production about 6 to 12 months after that. So good progress is being made. Because of the contracts and our success in our supply chain revenues, we're seeing good visibility of revenues for financial year 26 and beyond, as I've mentioned before. We've got a strong pipeline of opportunities. There's about 400 million at the moment in the sales and opportunities pipeline. We won't win all of that, but hopefully we will win a portion of that. Our supply revenue is building strongly, doubling this year, and we hope to see significant growth again in financial year 26. And we've got strong relationships with major semiconductor fabs and OSATs companies. Thank you.
Perfect, guys. If I may just jump back in there. Thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that have been submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboards. Guys, as you can see there, we have received a number of questions throughout your presentation this afternoon. And thank you to all of those on the call for taking the time to submit their questions. But Ian, Christoph, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so. And if I pick up from you at the end, that'd be great. Thank you.
Thank you. So running on to the questions. First one, is there any particular reason why the new joint broker has not yet issued a research note? We expect the research note will be published by the end of this week to coincide with our year-end results. Can you please update us on developments relating to the new satellite user terminal chips and their potential in terms of value to the company?
Okay. I mean, I covered the progress on that, on the user terminal chips. So as I said, there's good progress there. We've got those 4 chips with samples being released and the evaluations going on. I mean, in terms of the value, I mean, I don't think the real value of the design win is reflected in our illustration there, but user terminals are sold in the hundreds of thousands to many millions. Starlink has 8 million subscribers, so one design win itself could be in the hundreds of millions. But we're looking to get. I showed those constellations there. We're looking to get some design-ins in those constellations.
What expectations do you have for the PQC 3-in-1 IP block in terms of value to the company? Does the company plan to see further opportunities in the quantum computing space?
Okay. I mean, just to be clear, so post-quantum cryptography is not quantum computers. What it is, it's a cryptography which is resistant to attack by quantum computers. So the 3-in-1 IP was designed to be a very low area, so it could be deployed in both mature ASICs as well as using the latest nodes. As you may have noted, we licensed that original PQC in 5 nanometers. So we see this as a basic building block. Every chip needs strong cyber security to stop it being hacked, and that's driven by the Cyber Resilience Act and lots of legislation. So we've got a great piece of IP there that we see deploying in lots of chips, including our satellite communications chips.
Provided all criteria are met in terms of margins and creditworthiness of the customer, does the company have the scope within the next 12 months to take on a contract in excess of £100 million? The answer is yes. Normally, the structure of the contract would be something like, 15 to 20 million would be the NRE development income, and probably 80 to 85 would be the supply. We've done this level of contracts before, so yes, we would be able to do another one of these contracts. So, what benefits to date have been gained since joining the TSMC Design Center Alliance?
Okay. So, I mean, in terms of that, we've done joint marketing, including going to TSMC symposiums, which is only open to TSMC partners. We get enhanced support from them as well as actually being listed on their website. So we've had referrals coming in through that program. There's also a lot of prestige that goes with it. I mean, the TSMC do a very strong audit on your IT facilities and the security of that, as well as make sure that they take references with customers. So just the prestige that goes with that is worth it.
What benefits can be expected from the strategic partnership with CODASIP? Do you envisage forming similar relationships with other companies from now on?
Okay. So CODASIP have quite a unique piece of IP. They have a RISC-V, which is a type of processor core IP that uses a cherry instruction set, which is something that both the UK government and US government have been promoting because of its strength in cybersecurity and reducing memory leakages. So we see that as a building block for developing the hardware security elements within our chip. We also have a similar partnership with ARM. You can go to ARM's website and you can find information on ENSILICA there, and we have less formal partnerships with many of the other IP providers such as Cadence and Synopsys.
Can you please update us on the partnership with Oriole with regards to future supply of chips and expected revenue flows?
Okay. So just for the audience, so Oriole Networks are a UK-based, well-funded startup. They're doing photonic switches, and we announced we're developing their chip. I can't say anything about their volumes, but I expect them to be very successful. They've got a very strong management team with a good track record and some very good people funding them. So very exciting there, and we're really pleased to be supporting a UK startup like that.
How many contracts are you expecting to announce before the end of financial year 26? We are still targeting 3 to 4 contracts. We've signed a number of feasibility studies which we are working on at the moment, and we expect that some of those will turn into longer-term partnerships and contracts. We're also looking at other contracts with potential customers. In which niche area of the EV market does ENSILICA operate? What is the current demand for these chips, and can we expect to see any contracts signed in financial year 2026?
So, I mean, anything for the automotive sector now has to be EV compatible. So EVs themselves, they often require redesigning of the chips because of the different voltage levels, and also that EVs have a different set of actuators and motors in there, not just to drive the drive chain, but for things like the cooling system and other things. So our focus in this area is around things, motor actuator controllers called H-bridge controllers, but also sort of sensors. So I would expect to see another automotive design win, which as I said will be EV related, because everything is going in that direction.
What is the growth in employee numbers over the past 12 months in both technical and admin categories?
Okay, so on the technical side, we've added 28, which takes us to 185. On the admin side, we've added 2, which takes us to 14. And then, you may have seen we took on a team in Budapest. I mean, that was 18 altogether, which was one admin and the rest engineers, very skilled engineers with functional safety and automotive expertise, very related to EV. And we also took on a team in Cambridge with millimeter wave IC expertise to support the work on the user terminals, and all those people are busy on funded projects.
What is ENSILICA ADAS Limited? ENSILICA ADAS Limited is a dormant subsidiary that was set up a number of years ago. It's currently dormant, as we mentioned, and we may activate it in future, but at the moment it's expected to stay like that. Double bubbler. Firstly, thanks again to all ENSILICA staff for their hard work in financial year 25. Thank you. As well as the very positive progress and new contracts update on Monday this week. My question is, there has been speculation in that British firms cannot be involved in the EU's IRIS2 project even as subcontractors. Does this correlate with your understanding?
So yeah, it's an EU project, and we would come in as a component provider and not a prime. So there's nothing that approves a non-EU component going into that. I mean, as it happens that we as I mentioned, we focus on a European-based supply chain for our chips as much as we can, which really would put them ahead of, say, US or Asian-based. I mean, particularly with US-based technology, there's a thing called ITAR, where they don't really want those ITAR components in there. But we're classed as I think it's a Class B subcomponent. So we stand a good chance of getting a design slot in the IRIS2 constellation of some form, user terminals or beamformers, etc.
What is the growth in employee numbers over the past 12 months in both technical and admin categories?
I think we've done that, yeah.
Have we done that?
Oh, yeah, yes, yeah, okay. Sorry. Oh, yeah.
Okay. How rigorous is your valuation of future chip sales? So effectively, when we sign a contract with a customer, we look at the customer forecast, where the customer has a history of successfully bringing online chips. And products. We would take that customer's valuation. Where the customer is newer or a startup, we may adjust those forecasts downwards in order to take that into consideration. And every half year and year end, we reassess those future forecasts and assess whether there's a need to impair the asset or whether the volumes are still appropriate. What proportion of your revenues come from end-to-end ASIC services, i.e. design through to supply? I think that would be both the NRE and the supply. So probably currently about 2/3, I would say, are coming from those areas, whereas a third is just pure consultancy. Obviously, in future, we're looking to really increase the supply and also partly the NRE side. So those proportions are expected to grow. Why did you favor and select Budapest as your new design center?
Okay, I mean, we've been looking for a place in one of the EU 27 countries, and you know, with a good cost base and talented people, and we were lucky to actually find a group of engineers. So that was it. But you know, it'd been something that had been on our radar for some time, and you know, we're very pleased to have taken on this team.
What is the latest situation with SIA? I think, what is causing the delay in chip development if they are funding available? So SIA is undergoing a restructuring based on correspondence that we've received from them. They're actually making really good progress on that, and I think they're looking to get new investment into the group, and have signed, I believe, or almost signed an agreement relating to that. That doesn't impact the project and the grant funding, as the question alluded to. The grant covers the largest portion of that, but I think they do need to complete their restructuring and get all their affairs in order before the European or the Italian government will allow them to access the funds and progress the project. They've indicated that they should be able to do that in 2026, and we are getting regular updates from them. Okay. Do you develop proprietary IP as part of revenue generating contracts? There says build it and they will come.
Yes, I mean, yes, we do. I mean, we've got a large portfolio of IP, and we often modify that for customer chips, and the modification of that, you know, still belongs to, you know, to us. I mean, there are specific cases where we implement something designed by, you know, architected by the customer, where, you know, that doesn't go into our IP portfolio. But, you know, from project to project, we're building up that IP portfolio, which is sort of a snowball effect, makes each project easier, increases the amount of design reuse.
What is the latest situation with JLR volumes in automotive? Has the disruption with Nexperia chips created any new opportunities for you? Perhaps if I do the first part and you the second. So JLR is not a customer of ENSILICA. We supply chips into the automotive industry, and we have experienced some disruption. As I think I mentioned, we've taken that disruption into consideration into our forecast, and those are included in the forecast for financial 26. So we don't expect any further impact. And then just on the Nexperia.
I mean, the Nexperia one. I mean, Nexperia, you know, my understanding is they do sort of what they call MOSFETs, transistor switches, in you know, in compound semiconductor side. So that's not really our business. That's not the type of chips we do. These are, you know, simple power switches. I mean, as I said, it seems to be, you know, some disruption, but these are commodity parts. You don't just get them from Nexperia. You can get them from Infineon and other ones. But obviously, while they're Nexperia must sell them very cheaply, and you know, people need to go out and find other sources and build additional capacity while this is going on. But as I said, it's not an area where we play.
What is your current customer revenue concentration, e.g. top 5, and how has it changed in recent years? The honest answer is it fluctuates year on year, mainly because the customers that for which the chip was in development last year might not still be in development this year if that's completed and moved on. What we've seen is that it's diversified a lot in that we don't have one customer that's more than 15% of the overall revenues, looking at financial year 2025 and then also 26. So it comes really from a number of sources. Again, that can change if we win a really large contract, then that could become a larger portion. But what we are seeing is diversification. Debt repayable within 1 year is 3.86 million. Will this require refinancing? The answer is no. This is debt and leasehold payments that we will be repaying within the next year or so. So we don't expect any refinancing as a result of that. Trade creditors includes 5.9 million contract liabilities. What does this present and over what period are they payable? So contract liabilities is a term that under IFRS accounting standards was created and is the old deferred income. So what it entails is this is where we've received money upfront, or we've invoiced the customer and received the money upfront, and we need to meet our performance obligations under the contract. So these contract liabilities would be expected to unwind over the next 12 months. So basically, as we do the work, they unwind, and then if we invoice more, then it goes up again, and then it unwinds. We have seen it unwind partially at this point in the financial 26 year, but it does fluctuate depending on invoicing and activity. Okay. How fungible are your professional employees, i.e., can they work across several projects, and do they or are their skills very specific to a particular technical area or capability?
I mean, it depends on the type of skills. I mean, we have skills like millimeter wave chip design, where people have specific expertise in that, and you know, that's the area where they focus on. And then we have other areas where people can, you know, on the digital domain, where they can work on industrial, automotive, satcoms type stuff. So you know, it's there. So you know, we do have focused people with really, you know, world-class expertise in those sort of niche areas, and then people with broader expertise to deal with the, you know, the range of projects we get in.
What is your capitalized R&D investment expectation for 2026? So financial year 25 was 5.8 million. We expect it to be similar in financial year 26. In 25, there was a larger portion of internal IP that we capitalized relating to a specific project that we're actually currently using on our commercial projects. We don't currently foresee having something similar in 26. But of course, we see our level of NRE and our co-investment to increase. So the two are expected to offset each other, so we expect it to be broadly the same as financial year 25. Would you please clarify how cash consumption reduced so much in H2 financial year 25? Has the trend continued into H1 FY26? So the cash consumption improvement was mainly driven by new contracts that we signed, and then we really started the work and were able to invoice a large upfront for the work. That's also what's driving the increase in contract liabilities that we saw. Also, for example, the R&D tax credit was received in the second half. So, and that drove the real improvement. I think I mentioned we don't expect that it to improve that much during this year across the 12 months, as we will get to the period where these contracts get into their last 15%, and usually the invoicing is then towards the end rather than upfront. So we do expect cash consumption to increase again from the 0.2 million, but not obviously to the levels that were seen in the first half of financial year 25. How close will the company get to its 6 million credit facility limit in financial year 26? And is the company expecting to issue further equity in the short term? The company has drawn down the full 6 million of the facility that was available, and we're obviously also repaying the term loan portion of that over the next 3 years, of which 1 year is almost complete. There is another 3 million accordion facility, depending on meeting certain requirements and the bank's approval, effectively. As our going concern forecast and cash flows indicate, we don't expect to need to raise further funds to fund our normal operations. There may be cases where we would like to increase the speed at which we move forward some of our key ASSP and strategic projects, and that might require further financing in order to progress those more quickly. But for our normal operations, we don't expect to need additional funding at this point. Do you measure customer profitability? The answer is yes, but we do look at it across the whole period of the contract, including the supply. For the NRE stage, as you will know from the co-investment, we need to also invest a portion ourselves, and then in the future we get that money back and more in terms of the margins on the supply revenues. What proportion of your business comes from repeat customers? It's a difficult one. It differs from year to year, and I'd say we have.
I mean, most of the service revenue is is repeat customers, and I mean, obviously the supply revenue, we get an order every month, that's repeat. So
yes,
and then we've had repeat business from Siemens in terms of in terms of the ASIC development.
Yes, and then another 1 or 2 other ones probably that we can't name at this point. But most of the new contracts that we signed in financial year 25 are new customers. Hopefully they will turn into repeat customers, but it's difficult to say at this point. In the latest update, you referred to the number of definition and feasibility studies. Previously, these have not been mentioned prior to announcing NRE supply contracts. Has something changed in your approach, or is this just a different presentation?
So sometimes we have the feasibility study as part of the main contract. So we do it where we go straight on with the feasibility. But in this case, we had a number of very large feasibility studies, high value ones. We felt that we should announce those, and we actually received orders for 2 of them on the Friday before the announcement. So these were a few 100,000 each. So they were, they were announced there, and I thought we thought that the market would like to know that we've got that next phase of projects coming up through these studies.
Probably the last question as we've come on to the hour. Is there concern about China-Taiwan troubles, and how reliant are you on Taiwan supply?
TSMC is one of our major foundries. We most of the satellite technology stuff we're actually running through global foundries, so we have a focus on doing that in Europe. They will be putting or they're currently building a fab in Germany to run some of the technology nodes, but they're like the whole electronic industry. There is a big dependence on Taiwan, as they have 80% of the world's advanced node chip capacity.
Ian, Christoph, if I may just jump back in there, and thank you very much indeed for being so generous with your time then, addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review. But Ian, perhaps before really now just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Okay, all right. Thanks very much. Thanks everyone for joining us. Thanks for the excellent questions. We've got a lot of followers there. I think for us is a really interesting time. We're very pleased with the fact is we're booking high value ASIC projects and moving those forward into production and supply. And as we said in our IPO in 2022, we're building that portfolio of chips, and the supply revenue is coming through. In 24 it doubled, in 25 it doubled. So that's all coming through nicely. And as you have seen, we're addressing some very high growth, exciting markets, and we're very well positioned to capitalize on them. Thanks for your time.
Perfect, Ian.
Thank you very much. Bye.
Perfect, guys, and thank you very much indeed for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ENSILICA PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you.